Hi, everybody, and welcome to this market update. This is Ross, and I just wanted to get a little update out to you before I head out to family vacation. It's been a very busy month, and I haven't had a chance to do as much as I would have liked in terms of updates. And the next one will be on our options basics. That's the theme for this month. But I wanted to get this out because we're approaching an expiration day, and we talked about a lot of things last time, and so a lot of those trades are going to resolve this next week. And so I want to make sure you kind of see some of the things that have happened since we last spoke. So a couple of things. I want to start off first by just giving a little heads up that earnings season is just now going to get underway, and most of the big stocks, big companies that are out there are going to be starting to announce, and so that can be a volatile time. Now, obviously, we've had a quick little run up in the market. Let's first of all, before I go to the earnings plays, let's just take a look at our three main indexes and make sure that we know where we're at and what's going on. I'm going to use a 1 year graph, and so I'll just go to 1 year. And I've got the indicators that I like to use on there: 50, a 21-day moving average, the MACD, stochastics, and volume. So let's take a look. First thing I want to look at is DIA. That's the Dow Jones Industrial Average. And I've got a new fun little tool here, so hopefully this will work out well, that I can actually draw right on a web page. We look at this, and clearly the trend is up, not a very straight line. I'm doing that with a mouse. The resistance would be at this previous high, so we'll draw that line right there and look and see where we are right now in the Dow. Now notice that we had a nice little downward move right there, and that part of that was right after our last call, so literally almost a month ago, probably right about there. And we had a nice move down, and we were kind of expecting that as the market was a little overheated. And if we looked at some of those bearish ETFs we talked about and did the covered calls with an in-the-money play, we should be in pretty good shape right now. Now, what's happened here just in the last few days, we kind of bottomed out, and then you see this dramatic rise, about 8 days straight up. But notice where it's ending. If you zoom in on that, let's just go into 6 months and look a little closer. And if you look at that, you can see that we're fast approaching where the, let's get rid of all that and kind of draw it again. The fast approaching where that resistance is going to come into play. So look for that around 127 or 12,700 on the Dow as a point of resistance. Now, we've been going up strongly for the last week and a half. Notice the momentum is clear up here as high as it's been in the last 2 years. That's usually a sign where we need a little bit of a break. So that's what we'll be looking for. Even though the market's showing some great strength, it'd be time to look for maybe taking a little break. Now, when I look at this, just a few simple observations is, when I see these kind of things, I just don't want to jump into stocks right there. That's just not a place where I'm looking for a lot of plays, at least for the upside. I'm looking possibly to look at things that might get very weak if the market does hit that resistance and correct. And those are some of the types of things that I'd be looking at in this type of market. Let's quickly look at our other two indexes. Next would be the NASDAQ, and the symbol for that is the Qs, 3 Qs. And you can see, again, strong support in that $54 range. We came down off that. If you remember our last call, let's get rid of that. Our last call took place right around in here. We had a pretty dramatic sell-off right away. And then we just really kind of recovered all of it and right back up to that same spot. Now, resistance is going to be a little bit higher up there, but that's where we're looking at. Again, momentum, very toppy. If that hill starts to roll over, we'd look to pull back a little from the recent highs. Very overbought market. And also not a lot of volume. You would think that we'd have a big spike in volume, but that wasn't the case. So again, not an encouraging thing to be getting in. Now, what would be encouraging is if we pass these, breaking through these levels here. If you do that on high volume, again, getting up into there, volume up in there, then you'd see that market break out, and then we could have a substantial rally from that point. Again, personally, I'm not really expecting it. I think we've got a nice little run to recover. It's probably a little too much too fast. And even though people are saying the second half looks pretty good, I'd be a little cautious at this level. Let's erase that. Let's look at our last index, and that is SPY. Very similar patterns again as you see this. Now there is something here that's setting up. I just not that it'll happen, but something that I'm watching closely, and that is one of the most bearish patterns there is a head and shoulder. So there's a shoulder, there's a head, and if we roll over right here, potentially another shoulder. And what does that mean? Then you come down here, and I say support there, but where you'd look is in a break after that, right around in that area. That'd be on the S&P around 130 or 1300. Then you'd see some continued selling, again finding support in that second line there. So it could potentially happen. Just want to point your eyes to those things so you can monitor it. Okay, now let's take a look at a couple of the stocks that we've been talking about and looking at for these types of strategies in this type of market. First are the covered call type trades that we looked at. Let's see, right there. EBIX, just a great stock for covered calls. It's worked out really well. Again, the volatility picked up after this big drop right here. The market went down. We found some support, and I'm going to draw a line right here for kind of a support area. Now, we did have a dip below that, and that's happened since our last call. And so if we're looking at around the $19, $20 range as a great covered call trade and playing it a little conservatively, that dipped a couple dollars but came right back. And now we've kind of stayed right in that area again where we're at right now. So again, the stock repair strategy I spoke about in the last live call was one that we put on that dip, and it's worked out really well, and we'll have a max profit if we stay above $19, and we're about $1 above that now. So again, that's a type of a defensive strategy that makes income that I love to do in this toppy type of market. Really be cautious on the downside. The other one we talked about as a potential play was VXX. That's a volatility ETF, and again, as the stocks are rallying, volatility is declining, and you see that reflected in this thing. Again, we look at maybe some support around here in that $20 range, $21 range, and we did dip below that. But now look and see where indicators are very oversold and momentum is deep in the lower zone. And so again, not much of if we played it defensively, we knew if the market rallied, it could go this way. But when the market fell right after our last call, look where it got clear up to $26, and that was a perfect position. I had one that got called out because I just did the weekly options. This has a weekly option available to it, so you can literally do that covered call trade every week if you'd like, and it expires every Friday. Those options start trading on Thursdays, and then they expire the following Friday, so they're basically 8 days or 6 days in the market. Great way to kind of leverage up, and the premiums are decent. So again, stay close to the stock. Make sure that you're really playing cautious in this, but any kind of dip in the market, and you should see the VXX should make a nice move to the upside. So again, I'm still looking at that. I liked it. I'm in it. It's working out okay, and I'll be monitoring that as of next week. Okay, so those are a couple I just want to review. Now I want to have you build a little watch list, and the reason is there's just a handful of stocks that everybody follows and everybody trades, and you should too. And I think there's opportunities there. I've started paying a little more attention and doing some trades on these, and so I want to make sure that we track them and follow them when we do have a chance to get together. So here's your list, and we'll go through them one at a time, and they're part of the stocks that are coming up to earnings. So the first one is Apple. That's AAPL. The next one is Google, GOOG. Amazon, AMZN. Chipotle Mexican Grill, CMG. And Netflix, NFLX. Now these are five high-flying, fast-moving, very risky type stocks, but lots of activity on this, and there's opportunities, and I think they are a good barometer of the market type stocks to keep an eye on. So let's just look at earnings now, because all these stocks I just mentioned are coming up to earnings, and I want to show you how to find it first, because this is something you'll want to track for all the stocks that you're trading and following. Hang on a sec, I got to get my little drawing tool out of the way, and let's go right there. So go to investing at the investing tab. I'm going to Yahoo Finance and click on stocks, and it takes you right to this page, and you can see there the very first thing is company earnings dates. If I click on that, there's two ways to look up earnings. It'll tell me all the stocks in alphabetical order that are announcing earnings that day. So if I want to look for stocks that are going that day and play those, which I don't necessarily like to do. Then I'd look at that. Now, I always look right about now. I'm looking 2 weeks ahead, and I'm looking at some of the stocks again that are getting ready to announce next week. So let's go next week. Expiration day is the 15th. Let's just look and see which stocks are coming up. I'm going to click on July 14th, and let's just see a couple things. Okay, I've got to be quick here. So here's one of our big stocks is Google, and you can see that's announcing on the day before expiration. So all those options are very inflated in premiums, and they'll evaporate the very next day. And Google almost always announces the day before an option's expiration. Very, very risky type trade if you're trying to hold that over earnings. So then that's the one I wanted to point out. The next week, if we go past the expiration for the next week, you start seeing some big names here. So July 18th, the Monday, you see Amazon is going to announce. So there's one of our other big stocks. On the same day, Baidu, I don't know if I'm saying that. That would be another one to add to your list. Baidu, B-I-D-U is the symbol for that, and I'd put that on the list of wild stocks as well. So again, there's a couple of our big stocks are trading that day. The other thing I want you to learn how to do is how to find the earnings date. All you got to do is use this tool up here. Like for CMG, if I just type it in, it says July 19th, so it would have been the next day. And if I scroll down, sure enough, there it is right there. Also, Apple on the same day. So again, we're starting to see a lot of bigger companies. Altria, big a tobacco company. Also one to keep an eye on. I saw some of the airlines coming up, Harley Davidson, something like catches my eye. Anyway, that's what I like to do, and usually what you're looking for is two weeks or so before an earnings announcement, you'll get a little run into the earnings. Now, I definitely don't like to hold options if you're trading options over an earnings announcement, but if you're doing selling strategies, that's when the announcements come out, the option premium just evaporates. So anyway, So anyway, that's gives you a little insight on that and something to keep an eye on. So what I'd like you to do is just really kind of keep an eye on those stocks. Let's go look quickly at just a couple, and then we're done for this update. I've only got about 2 or 3 minutes. So AAPL, and we take a look at Apple, and let me get just a couple of quick lines on there for you. Forgive me, I got to get that back up. So we see here again resistance at this level. We're fast approaching that. Good support down there, 315 on Apple. Just a meteoric rise over the last $25, $30 move over the last few days. Getting a little toppy going into earnings, but again, typically a strong stock coming into earnings. Let's look at our next one. And then I'm going to be out of time. I have to close this or I can't update to eBay, or excuse me, YouTube. So Google would be the next one we take a look at, and I'd like you to look at the rest of them. Google, if we see that again, it's peaked up there, nice downward trend, found a little support, started to rise pretty dramatically going into earnings. Usually, if you look at the earnings dates, here's one and here's one, and look at what the stock did after those. So if I draw a line on those, look at what the stock did on those days. So I like these kind of stocks, even if they're great news. Usually the stock pulls back after the earnings announcements, and so we're coming up to that. It's an expiration day following the announcement of Google's earnings. Good, bad, or ugly, after a big rally like we've seen over the last, $60 just in the last week or two, you'd expect, even with good news, a little bit of a pullback. So there's a few things for you to keep an eye on. I'll have another course out. I've got a special guest coming to do a class with us on options. You'll love it. He's been in this a long, long time, somebody I know and respect well. And so look for those sessions. I'm heading out on vacation tomorrow, so nothing will happen for the next week or so. And as soon as I get back, we'll have our next call, and you'll be getting some sessions by then. If I get a little time on vacation, I may do one and send it out to you. But anyway, happy trading. We'll talk to you soon. Bye-bye.